even an expert insider of Wall Street, like Lloyd Blankfein, the head of Goldman Sachs, even he acknowledges that the role of the financial system is to bring capital providers in touch with capital needers, that investors are responsible for putting their money to work. They want to put their money to work. They want to give it to companies that are growing, companies that are making more profits, companies that are providing useful goods and services. So in my book, I start by looking at, okay, let's see where that fits in. Where does capital formation fit into the financial system today? Well, the answer to that is that the capital formation system here in the U.S. Raises about $250 billion per year for U.S. business largely. How much do we trade with each other? How else does the financial system work? The financial system is investors trading with one another. Each investor, when you get right down to it, thinking he's smarter than the one on the other side of the trade. There's no net gain to anybody or any loss to anybody, except the people in the middle make a lot of money. And that total in recent years has run about $33 trillion. And that means that we're doing about 99.2% of the financial business in speculation and about 0.8% in long-term investment. That is a system that is out of whack, very clearly. It not only applies, there are two fixes that come to mind here. One is, and I know John in particular will agree with this, and I'm sure Roger will too. One is the nature of the owners of stocks. And to give you a little more data, which I'm a little hesitant to do, but I got to make the point, and that is back in 1950, according to the Federal Reserve Board figures, institutional investors owned 8% of all stocks in the U.S., and today they own 70% of all stocks in the U.S. A handful of institutional investors, maybe 50, own well over 50% of all the stock in America. These are institutional investors who have lost sight of their role as gatekeeper for the corporations in America, that huge assemblage which we call modern capitalism, corporate democracy. And the corporate democracy is there. We have a right to vote. And I have a chapter in the book about this, which is entitled, I think you'll get my point, The Silence of the Funds. Mutual funds are very passive in their voting programs. They talk about, as the article in the Sunday Times did, talking about BlackRock, they talk about all the staff they have to look at these things, and whether that's just smoke without the fire, I think is a reasonable question to ask, because if you don't vote, what happens to that? We don't get any disclosure about the company managements they talk to, the issues they raised, and how those issues were resolved to satisfy the investor. So there has to be a greater activity, part of fiduciary duty, in my opinion, for these institutional investors, a fiduciary duty to serve their clients.